coming to terms with low implied volatility.
We're having a moment.
We're having a moment, yes. Let's take a look at the next slide. On Friday, June 2nd, the VIX closed at 1460, which is the lowest VIX recorded since February 19th, 2020, the day before the 2020 crash. Do we have a 2020 crash?
Do I remember? Do you consider it a crash? Is that what you're asking?
2020 Feb crash. I mean, 2020.
I don't remember it.
2020, the market sold off in March because of COVID.
Right.
You know, I mean, it's that,
Right.
but that was March. Interesting. Where's the VIX right now?
VIX is 15 and change. /VX is 1686.
Yeah. Okay.
Right. VIX is trading at 1511, up 50 cents.
Beautiful. Mm-hmm. Let's take a look at the next slide. With volatility hitting multi-year lows, let's refresh ourselves with how often volatility reaches these levels. A distribution will show us the following about implied volatility: the average value, the tails, where it clusters, and the probabilities around it all. And the one thing we talked about this morning was skew, and all skew does is point out that there's a lot more risk when volatility is super low. But let's take a look and go into some of the details here. Next slide. So the first thing we look at is the distribution of daily returns. On any given day, the VIX has gone down 57% of the time, but the outliers were larger to the upside by a factor of 3. Since 2020, the largest down day in the VIX was 23%, while the largest up day was 62%, nearly a 3 times difference. This explains when volatility is low, it's obviously easier to have a greater up move in the VIX on a percentage basis. That's why skew is so high right now, SKEW, the index, because on a percentage basis, if you have really high implied volatility, like 30, you're not going to get something that's going to go to like 90 in a single day. But if you have volatility at, let's just say, at 15, and it goes to whatever it is, 25, mm-hmm. that's your 60% move, mm-hmm. which is possible. That's the whole difference. But let's go to the next slide. So since 2000, the current level of volatility marks the 29th percentile of all occurrences, meaning that 29% of the days saw the VIX lower than now, which again, that's since 2000. And we went through some really lull periods
stagnant
since
markets
2000.
And volatility, where they didn't move.
But we just want to give you a little bit of a longer term perspective here. And since 2000,
I would never have guessed that 30% of the time, I'm just rounding, we would be in lower than this.
No, that doesn't surprise me at all. We spent years
That is true.
Under 15. We were hoping for 15.
Right.
We were at 12. We were like, I can't wait.
What have you done for me lately?
I know. I can't wait till it gets back to 15. Mm-hmm. Anyway, so just to put it in kind of a perspective, it's not not crazy low. Let's go to the next slide. After taking into account the last couple of years, the average level of VIX is about 20. Since the distribution is skewed, only 40% of the time the market will see above average volatility. I would have probably argued that number would have been lower than that, but I'm surprised. But anyway, the distribution is skewed, so only 40% of the time the market will see above average volatility. I'm surprised it's as high as 40%, actually. Mm-hmm. Mm-hmm. Let's go to the next. Apple. Oh, Apple's up $3. Apple beating Apple.
Oh, you sold some call spreads, yes.
Yeah, I've been selling call spreads in there all day. Let's take a look at the next slide.
Even the S&P is only up 3. Apple's trying to save the market here.
Yeah, but the Russell's down 32. I think this. I do not like this Russell NASDAQ trade today at all. Ugh, ouch. With the recent sharp decline in implied volatility, we should be allocating roughly 1/3 less capital in our portfolios than we were a few months ago. This is a key piece that we've talked about in the past. This is kind of the meat of today's market measure. But the total portfolio buying power reduction usage as a percent of net lick. Now again, we've talked about this. There's a conservative, there's a moderate, and there's an aggressive mode. Okay, this is the super conservative mode. Okay, so again, there is a conservative mode, a moderate mode, and aggressive mode. This is super conservative. VIX over 40, you're at 50%. VIX 15 to 20, you're at 30%, and under 15, you're at 25. That is right where we are right now, is on that borderline between 25 and 30%. I'm usually a little bit higher than that. I'm actually right there right now in that range, 25 to 30%. But I'm usually higher than that. So this is probably pretty good range. You know,
Yeah, for what you have going on in the market. Yeah, I agree with you. I'm on the line too.
I'm comfortable with much higher numbers than these in an aggressive marketplace, but right now, not bad.
Very good.
Let's go to the last slide. Spoo's down on the day, by the way.
Yes, down 50 cents. NASDAQ up 34. Russell down 33, and the Dow down 100 and change. Volatility, since we're talking about it, up 5 cents to 17. Even.
Yeah, and what's weird is that
That's /VX.
a lot of the NASDAQ's strong relative, but I guess it's like Google and
Netflix and Apple leading the way. Apple up 275. Netflix up almost $7. Tesla up 4. Was up 6.
So let's take a look at some of the takeaways here. With implied volatility coming down to pre-COVID levels, we have to mind our capital allocation in our portfolios. So according to our research, we should be at our lowest level right now, just based on where volatility is relative to where it's been. And the research behind capital allocation levels comes from outlier tendencies behind implied volatility. Because upside outliers in the VIX are 3 times higher than to the downside, we protect against them by reducing. No, that's not right. Capital allocation comes to outlier tested because upside. Oh, they're talking about the VIX itself.
Yeah, by reducing size.
Yeah. Because upside. I was thinking about market moves.
Oh.
Because upside outliers in VIX are 3 times higher than downside, they are protected by reducing size. That's exactly right. Exactly.
Perfect. Good job. Good job by the team.
Yep.
Awesome. Even the S&P is down $1. NASDAQ up 25. We'll be back in 90 seconds. We got more Tasty Live with, oh joy, your friend and mine, Mr. Scott Sheridan, next. Tasty Trade World Headquarters.